Good afternoon, ladies and gentlemen. Welcome to our special show of Market Guru, where we now start paying attention to the second quarter earnings that are upon us from tomorrow, which is October 10th onwards, starting with TCS. Our guest for today is a gentleman who analyzes the telecom, internet and software space in great detail. We are joined by Mr. Piyush Pandey, Senior Vice President for Equity Research at the Institutional Desk of Centrum Broking. Namaste Piyush ji, and a very warm welcome to you, sir. A nice correction before the second quarter earnings that are upon us has made the market lighter as well as a little more easier to predict from now on. Overall, let's begin with this broad theme. What are the 2 or 3 broad points that you are looking for in second quarter earnings for corporate India against the backdrop of now a change in stance by the Reserve Bank of India on its interest rate outlook?
See, broadly, I would say 2 things so going ahead, we can expect that RBI should reduce interest rates in the coming quarters, and that would lead to lower cost of capital for the Indian economy. So this, in a way, I think would drive equity markets because lower cost of capital returns in lower weighted average cost of capital, and that in a way support the equity prices. And secondly, I think crude prices have been benign over the last couple of months, and that should also support Indian, I would say, current account deficit and in a way like the Indian stock market. And finally, the sectors which I cover, say broadly, like for IT, I would say generative AI is the key buzzword, and we expect that in this quarter, Indian IT companies should report decent deals in generative AI. Which we feel that incrementally going ahead, projects in generative AI would be key revenue driver. So that is something which we have to look out from this TCS result also tomorrow, which is scheduled.
Okay, let's drill down stock-wise, Piyush ji. Very quietly, without any fanfare at all, Infosys today hit a record high, 1952 yes. For you. It's rising for the last 5-6 trading sessions, ladies and gentlemen, at a time when the maximum pain that was seen on Nifty and Bank Nifty over the last maybe many months. Piyush ji, we don't credit Infosys with much, but in this backdrop of constant pain in the market, what is the quarterly number of Infosys looking at? And why do you think it hit a record high?
See, Infosys, I would say, first of all, valuation was comfortable for Infosys for last several quarters. So that supported this upside. And secondly, I would say that Infosys numbers have been looking up after several quarters of disappointment. So if you look at FY24, that was pure disappointment in terms of growth numbers. But I would say from Q1 onward, things are looking up. And the management has been focused towards developing new age skills in cloud and I would say generative AI, and that is some sort of supporting, I would say, building sort of optimism towards Infosys.
Okay, in June of 2024, and I'm talking about 4th of June in particular, Infosys was at 1400 rupees and now at 1952. Like I said, doing pretty well as far as prices are concerned. Piyush ji, let's look at it. Let's look at the IT sector from the point of view of mid caps, small caps, and large caps. Large caps we've discussed. What, according to you, represents value at this point of time, where viewers can possibly take a 2-year view into IT and maybe reap higher than normal market returns?
See, for IT sector, I expect some sort of time correction over the next 3 to 4 months. Because valuation, at the current valuation, it prices in most of the positive triggers. Say, for example, even the optimism from this turnaround, and there are in fact there are visible green shoots in the PFSI and tech vertical. And plus, the US interest rate cut, I would say IT stocks are pretty much pricing in that also. So for the next 3 to 4 months, I would say at the current valuation, things are pretty much priced in. We can expect some sort of time correction. But if anyone has to make a fresh entry, it has to be a medium to long term view. So I would say anyone who has to make a fresh entry, it has to be at least 12 to 18 months of view for the IT stocks. I would say for the near term, it would be a challenge, I would say, because there is nothing, I would say, which is currently at value for the near term.
Okay, so that's okay. That's very simple. It's a challenge for the near term. Fine. And where do you think will the maximum outperformance, at least in quarterly earnings within the IT space, will lie? Let's forget stocks for a moment. But where do you see strong quarterly Q1Q growth in terms of stocks, and where do you see even Q1Q plus year on year growth?
See, I would say for among the stocks, our top picks are like, say, in tier two category, we prefer LTI Mindtree and Coforge
Okay.
are our top picks. Because for see, Coforge, even the last quarter results are very strong in terms of executable order book, in terms of revenue growth, in terms of hiring intake, and management execution has been very strong for Coforge. For LTI Mindtree, I would say after the merger, the synergy benefit are yet to come. Synergy benefit are yet to come for the LTI Mindtree, and we
Yes.
expect that there would be margin synergy because the current operating margin are well below the margin they used to operate prior to merger. So we expect that LTI is a story of margin recovery, and plus they have very strong skill set in terms of data and cloud and AI. So for I would say it's like a very sweetly placed, not too big company, not very small company, very sort of like a mid-tier IT company with diversified offerings and plus well placed to this ride this current tailwinds in the demand environment.
Okay, fair point. So the top picks remain L&T Mindtree and of course Coforge. Coforge is already at a record high. Let me just see what L&T Mindtree is doing. Unfortunately, I can't raise the price here. Never mind. So of course, let's stick with Coforge, which is already at a record high. Piyushji, let's drill this IT sector a little bit more. A lot of people say that with the advent of artificial intelligence and of course the setting up of global computing centers by overseas majors into India,
Yeah.
the predominance that Indian IT enjoyed is going downhill. Do you agree with this hypothesis?
See, broadly, I don't agree. So there are two things. First, AI will increase the volume of work. So generally, I would say there is no scarcity of work in the tech sector. It's primarily
Okay.
constrained by capacity and supply of manpower. So
Okay.
as manpower get access to new AI tools, the productivity of staff will increase. The volume of work which can be done by a single person that will increase. And in a way, you will find that the internet companies will be doing more amount of work with certain supply of manpower. So I would say overall productivity will improve. And as
Okay.
far as GCCs are concerned, I would say GCCs are primarily into work which clients don't want to outsource to third-party vendors. So they are primarily into those type of work. So in a way, I would say even with the coming of GCCs, it will help to improve the entire IT ecosystem. See, IT ecosystem will develop, the supply of talent will be more broad-based, and as demand recovers, say in a quarter or so, Indian IT companies will be better placed to recruit from such centers.
Okay.
So, so if you see last time, what happened is that when demand came back, I think Indian IT companies found it very difficult to hire staff. As a result, attrition jumped, and operating margin was badly impacted. But now I think GCCs would help to make it more broad-based.
Okay, and you know the reason why I am quizzing Piyush ji more on IT is because he has a Bachelor of Technology, BTech, and Electronic Engineering from Indian Institute of Technology at BHU. So, and that coupled with a background in tech and stocks is what makes Piyush ji such a deadly combination. So, if see, this GCC theme in India is really big, and you
Yes.
explain it very well that these global computing centers will be doing the work which global companies don't want to outsource to an unknown company and want to do that work themselves. Therefore, they look at cheaper talent in India and of course the easily availability of that relatively inexpensive talent. Now tell us, Piyush, if one needs to play this GCC theme in India, how are you advising your clients to sort of position their portfolios in a manner where the GCC explosion will become apparent in their portfolios?
So I would say there is no direct theme to play the GCCs, but I would say this emergence of GCCs would in a way help to drive in a way I would say help to drive uh, per capita income, because they will create more jobs, per capita income will increase, and in a way
Okay.
they will support consumption. So in a way it will support domestic consumptions, which can be like say consumer durables or like say real estate
Okay.
or consumption. So I would say it will support job creation, because if you notice that over the last 3 to 4 quarters, the hiring by Indian IT companies was very muted, where GCCs were hiring in a very big numbers. So I think that supported the job creation for the IT talent, and in a way it will support the consumption story.
Okay, fair point. I mean, if there is no direct play on GCC available apart from Cummins, ABB, and Siemens who set up these GCCs, and of course, land players like TARC and maybe DLF to some extent, there's nothing we can do. Before we move on to the next sector, Piyush, your view on Tata Technologies. This has been one of the finest listings that we saw in 2023, but it's disappointed a lot of people. It had a fabulous listing, but from 1400 rupees it went all the way down to 900, and now there seems to be life coming back to Tata Tech. What is your medium term outlook on Tata Technologies?
Actually, I don't have this stock in my coverage, so it will be
Okay,
difficult. It will be difficult for me to comment on this technology.
no issues.
But but only thing I can say is that Tata Tech is a premier company in the ER&D play, and has a very high concentration risk to like say few selected clients. So that is we are like.
Okay, so let's just draw a curtain on tech stocks in the form of L&T Mindtree and Coforge, which remain as your top picks from the mid cap space. And of course, we'll await earnings from TCS, get back to you again tomorrow, day after, and find out what the earnings have been. Now, let's shift focus to the internet space, and I'll request the PCR to continuously fire charts of Policy Bazaar, of Paytm, Zomato, and of course, stocks like Car Trade, etc. Piyush, this is one of the most exciting space which is now coming up really, really well in the country, which is the listed internet space. About 10-12 players are now dominating this space. What are your 3 or 4 top picks here, and how are you seeing this sector change the landscape of the economy, and of course the thought process of newer investors?
See, broadly over the last, I would say last 2 years, the focus of the internet companies has been more on improving profitability. So you will find that operating margin of say company like say Zomato or like say Policy Bazaar or even Paytm or even say like say a car trade, they have all improved. So operating margin has improved in the last 2 years. So in a way they have become, I would say, more profitability has improved, and that is what I would say that is what has been appreciated by the investors. So in a way, for the among the internet companies, I would say the story has been like say wider penetration that is supporting these internet companies, plus some increase in ARPU. So this combination of increase in ARPU along with rising penetration is supporting the growth of internet companies. And among my coverage, I prefer companies like say InfoEdge and MapMyIndia. So this InfoEdge, it's a primarily play on the Naukri business. So with the revival of IT hiring, so IT hiring is obviously looking up, and as per the commentary, I think most of the IT companies are expected to increase their IT hiring. So that will support companies like say Naukri and InfoEdge. So that is what I prefer among the internet companies, and along with MapMyIndia.
पीयूष जी, 8,200 रुपये, 8,400 रुपये actually on InfoEdge, a secular move one way. Is this an entry level for the stock? I mean, those guys who are lucky enough to have them in their portfolio, of course, no complaints. But
See,
8,400.
I would say fundamental looks very good in terms of
Okay.
all the four segments, like say Naukri business, 19 acres, Jeevan Sathi or Shiksha. So they are doing well, and along with maintaining around EBITDA margin of roughly 40%. Yes. So I would say, uh, see, in this info age, you would see that 19 acres and Jeevan Sathi, they might break even over next 1 or 2 years. And
Okay.
plus, Naukri is picking up primarily led by this IT hiring. See, valuation is one thing, and as I said, that the market is looking, I would say, a price to perfection. So in a way, near term, I would say near term, if we speak on a fundamental basis, it should be like say we should say time correction for the next 3 to 4 months. So I would say, uh, I would recommend that have a fairly mid to long term view. Say it's 12 months to 18 months. Have a before you make an entry. Otherwise, it will not be prudent to have a 6 months view and then make an entry in the stock because at the current valuation. So that is what I would say.
Okay, so where do you think Info Edge, which is Naukri.com, is headed from current levels? Give us a nice, decent target 1 year from now.
Uh, See, I would say like nine. See, my current target price is 8579.
अच्छा
My
चलिए
current
वो तो आ
target
ही
price
गया.
is yeah, and I am positive on the stock. So that is what matters. Like I said, it's like say the stock has run up, and I am pretty much positive on the stock. And the story, I would say the story looks good for the next couple of years. So as long as the story looks good, and so in a way, I think one can hold for the next 2 to 3 years. That is where.
Okay, I'm sure you are in touch with the management because you've been tracking technology for a long, long period at Batliwala in Karani and then Yes Securities and one other brokerage as well. Why don't you suggest that they do a stock split and maybe a bonus so that it becomes affordable to poor folks in the market as well?
See, that is a management decision that they haven't done stock split. But I would say this is, I think the company, I think it is as per them like how they want to proceed here.
Yes,
And
yes.
also I would say
Okay.
they have a stake in Zomato. So
Yes, I
Zomato has been
agree.
doing
Yes,
so
yes.
Zomato has been doing pretty well, and that is also supporting this info age. So I would
Yes,
say in terms of yeah. So in terms of fundamental indicators, their stock I would say looks pretty good in terms of business indicators.
okay, because you bought Zomato into the picture, let me just throw a googly at you. Ladies and gentlemen, Info Edge or Naukri is one of the founding parents of Zomato, and their holding in Zomato is also reflective in the stock price that you say on Info Edge. Uh, Now comes the googly, Piyushji. What would you prefer from current levels, Zomato or Info Edge?
See, Zomato would be preferred by a more risky investor. As this is like a duopoly, they operate in a duopoly market with a very focused opposed to this food delivery business and this grocery delivery business. InfoEdge is sort of like uh, InfoEdge would be preferred by a person with an average risk appetite, where you have 4 or 5 businesses doing pretty well, 4 or 5 businesses
Okay.
doing pretty well, plus stake in Zomato. So with the average risk appetite, uh, I think Infosys would be the preferred one. For Zomato, I think valuation remains very high. So,
Okay.
of course, I think we also have to see how this how the competition from Swiggy shapes up over the coming years. But of course, Zomato has been doing pretty well. It's just that at the current valuation, it has been exposed. Yeah.
Okay. And the much storied problems of Paytm, do you think they are all now sort of baked into the price? We've seen a very sharp rally from 350 onwards to about 750 now. Is the best yet to come for Paytm, or at about 750 rupees you think everything is in the price, good and bad?
See, I would say uh, for Paytm, I would say uh, they need to figure out 2 or 3 businesses which they want to focus on. Because generally in current times, the companies which focus on just 1, 2, or 3 segments, they find it easier to deliver, I would say, value to the customers and investors also. But when you try to focus on 4, 5, 6, 7 things, uh, it somewhat becomes difficult, I would say. So recently we saw that Paytm sold its ticketing business to Zomato, and now it looks that Paytm wants to focus on few core things, especially say uh, four things like say the mobile based payments and UPI, which they has been their core strength. So I would say it for Paytm, it would primarily depend on how much they want to focus on their core segments, and that is what can drive value for them. And this was visually in the case of say Zomato, like so Zomato focused on say one or two segments, and they have done for the last several years, and that is what is reflected in the share price of Zomato, which you now see.
Okay, fair point. And within the still undiscovered, stocks like car trade, FSN e-commerce, which is of course Nykaa, what would be your top three stocks in terms of top picks in the internet space? You've mentioned Naukri, you've mentioned Map My India, maybe one or two more.
See, I would say Zomato would be still a better pick than compared to say Paytm or Card Trade or like say Nykaa. So Zomato can be still a better pick in terms of because it's like a duopoly market they operate,
Fair
and
point.
it's a duopoly market, and I would say Zomato has figured out the traits of this business. Like I would say, they have figured out it completely. They have
Absolutely.
figured out details, and I think now they are relentlessly focusing on the single aspect, which
Okay.
is able to I would say drive more repeat orders, and they're able to expand the market size. So I think that is there.
Okay, so that's very well put. I think anybody who's not even an equity analyst can figure out कि भाई Zomato का काम बढ़िया चल रहा है. आपको हर सोसाइटी में इंसान दिखता है, उनके डिलीवरी का बंदा, आपको बहुत लोगों के फ़ोन में Zomato की ऐप दिखती है और अक्सर इस ऐप का इस्तेमाल दिन में 2-3 बार होता है. So I think the broad 4 or 5 parameters that you would try to set up an equity research structure are there in Zomato, and I agree with you. Now, only the question is what is the valuation and what is your entry point, but this is a stock for the portfolio for the long term. Now comes the third sector, telecom. What would you like to discuss further, the debacle at Idea, Vodafone Idea, or the great rally that we are seeing on Bharti Airtel?
So I would say my topic in this space is Bharti Airtel. Uh, so couple of things like for example Bharti Airtel, the capex intensity will come down going ahead. Most of their capex is done in 4G and 5G, so we will see a moderation of capex intensity. And plus also like on account of this tariff increase, their operating cash flow will improve. So you will see like their operating cash flow will improve, capex will decrease, and plus this tariff hike will drive their ARPU. And this story of 2G to 4G migration. This 2G to 4G migration will again continue to drive their ARPU. So in a way, Bharti has industry leading ARPU at rupees 211 rupees, and plus uh, so in a way I would say pretty well placed to ride the industry tailwind. And also I would say for the telecom sector, the competition has become more benign after this more benign, more moderate. So you can expect, I would say, tariff. I would say periodical tariff hikes you can expect going ahead, and that will support, I would say, improve ROC profile of the companies. So that is there, like.
Okay. Piyush, where are you advising your institutional investors to put in money in telecom? Is it the telecom equipment players or the electronic manufacturing companies? Where do you think lies true value over the next 5 years or so, where valuations may have gone up at the moment, but you still feel that these telecom stocks are multi-baggers even from current levels?
See, for Bharti Airtel, I would say the cost of data per GB still remains very low compared to global standards. So cost of data plus ARPU remains very low compared to global standards. So in a way, I would say, see if you compare say 7 to 8 years down the line, we used 1 GB of data used to cost roughly 250 to 300 rupees 1 GB of data. Now the cost has gone down to roughly 10 rupees per GB of data. And I would say, like, see, going ahead, we would see tariff hikes, and plus, in a way, I would say that our cost of data should approach something closer to global averages. So in a way, Bharti Airtel remains a preferred pick to ride this story of rising ARPU. Rising ARPU plus you would see this 2G subscribers going to moving to this 4G mix. So that will support better growth, better operating margin.
Okay. So Bharti Airtel would be the top pick. Time is short, Piyush ji. Now let's now construct an overall portfolio from your understanding of the market. You've mentioned L&T Mindtree, Coforge, Naukri.com, MapMy India, Zomato and Bharti Airtel as your picks. Now look at the broader market, because you are in charge of overall institutional equity research. Give us top 5 picks at a time when the market has corrected a bit and possibly you see better days ahead because DIIs are buying like crazy. In your universe of tracked stocks at Centrum, which are the top 5 ones that you prefer?
See, I would prefer to stick to my sectors, like say IT, telecom, and internet sectors. So in my sectors, see, if you try to make a portfolio, I would say, see, among the tier 1 IT companies, I prefer TCS among the tier 1 IT companies. So if you include, like say, TCS plus LTI, Coforge, Bharti Airtel, and Info Edge, with mix between say large cap and mid cap to roughly around say 50% is large cap, 50% is tier 2 category.
Okay. So that's the portfolio, ladies and gentlemen. Piyush would stick to his 3, how should I say, sectoral research specialities, which is tech, telecom and internet. And within those, he prefers TCS in the large cap space, L&T Mindtree, Coforge. Coforge is at a record high, L&T Mindtree is headed that way, and Bharti is also at a record high, and of course Naukri.com. So that is the picks that for the festive part of the market we get from Mr. Piyush Pandey of Centrum Broking. Thank you so much for your time, Piyush ji. We hope to remain in touch with you and of course understand the intricacies of the market within this TIT space, which is doing extremely well so far. Thank you so much for your time, sir.
Thank you.
That, ladies and gentlemen, was Mr. Piyush Pandey, head of institutional research at Centrum Broking, and a gentleman who has a very strong grasp on technology, telecom and of course internet companies. Let me just repeat his top picks. They are TCS, whose earnings come in tomorrow, L&T Mindtree, now coasting near record highs, Coforge at a record high today, Bharti Telecom, the top telecom player in the country, and of course Naukri.com, which is Info Edge. Thank you so much for your time. I hope you enjoyed this very specific sectoral view that we presented to you in Market Guru. From tomorrow we have earnings upon us, and it will be TCS that will be kick-starting second quarter earnings. I'll be back at the helm at 8:30 a.m. Till then, goodbye. Good afternoon, ladies and gentlemen. Welcome to this special episode of Market Guru on Business Today Television. I am your host, Shail Bhatnagar, and our guest for today is none other than Mr. Vineet Sambre. He is the CIO for equities at DSP Mutual Fund. Vineet has been with DSP for the last 2 decades and has a sterling career managing the mid-cap and the small-cap funds, as also some other schemes. A very warm welcome to you, Vineet. What a pleasure to host you during the festivities that are around us. The market seems to be on a slight back foot, but today's change in stance by the Reserve Bank of India towards